Let me show you how to convert your taxable 401k or IRA account into a Roth tax-free account. And this is a great way to do it because we don't have to come out of pocket for the taxes when we do this conversion. And when we're done, our money is completely tax-free now going forward. Very important down the road. If you stay with me till the end, I'm also going to talk about tax brackets and Medicare IRMAA, the things that we need to manage during this process. But this is a great way to get this done. So let me show you very quickly how it's accomplished. We're going to be working with a fixed indexed annuity, which is, as you can see, the most aggressive of these safe options. We can never lose money in a fixed index annuity. We can only gain money, but we're going to use this vehicle to do this conversion, and I'll show you why it makes sense and how we don't have to come out of pocket for the taxes. So let's get right into the calculator. And what happens with this product is the insurance carrier, first we create a typical IRA annuity, and then the insurance carrier makes a mirrored Roth annuity. In other words, same thing, just the different category. And over a period of time, we're going to transfer our funds from the traditional IRA annuity into the Roth IRA annuity. And when we're done, it's all tax-free going forward. So very exciting to do this. Let me show you exactly how it works. So we're going from one bucket to the next bucket. And based on your age, your income, your tax bracket, all that stuff. And again, I'll talk about tax brackets at the end and where to find this calculator so you can play with it yourself. But we're going to start with somebody that's age 60. So when we start at age 60, and we're going to put their income at $225,000. And they will be filing joint. So you can see on the tax bracket that, again, I'll talk about at the end, they can go all the way up to $394,000 in that tax bracket without having any changes. So this is a great time to make this conversion so it doesn't affect us adversely later. And we're going to look at an IRA or a 401k. Let's assume they have $1 million in their IRA or 401k, and we're going to work with $500,000 doing the transfer to make it tax-free. We're going to be working in a state that does not have a state income tax. If you are in a state, I feel sorry for you, in California or New York or Massachusetts or wherever, you can play with that here as well. And then the annuity bonus, that's what's going to drive this. We have a product right now that has a 12% annuity bonus, and then it also has another 9% of an enhanced bonus. Now the enhanced bonus does have a rider fee of 0.95%, but it's easily offset by what we're going to do, and I'll show you exactly how we're going to do that. So we're going to make this bonus 21%, and then we're going to go with a projected growth of 5% in earnings. Pretty conservative going forward. We can't predict the future exactly, but we will put it at 5%, and we certainly ought to be able to get there. But you can see what we have here on this chart is we're going to be in the 24% tax bracket based on that income. And again, we got room to move with that. And then right now in our standard IRA plan, we have $500,000. We're going to move it into an IRA annuity where we're going to have $605,000. That's a 21% bonus that is immediately paid. We're going to use that bonus money to pay our taxes. I'll show you exactly how it works. It's very exciting to do this, and I'm pretty happy with the results. So what happens at the end of year one, so we're going to put it in this annuity, it sits there for a year, and at the end of year one is when we can start to transfer funds. And the reason we can do that is because at the end of year one, you can pull 10% of the value out without having any penalties. So that's what we're going to work with. So you can see here, when we end at year one, what's going to happen is we're going to move $121,000 out of that IRA annuity. We're going to pay $29,000 in taxes, but we're not writing a check. The insurance carrier does all of this. We don't really do any of it except initiate it, so we don't have to transfer things or write checks. $121,000 is moved, $29,000 paid in taxes. So what happens now is we have $96,005 in our new Roth tax-free annuity, $508,000 in our standard annuity, still taxable account. So now we get to the end of year two. We're going to move $127,000. And again, this all works within that tax bracket, so we need to manage that. And I'll show you that in a minute as well. Taxes paid $30,000. We now have $202,000 in our tax-free annuity, $400,000 in our regular taxable annuity. End of year 3, you can see how this is going. We're moving $133,000. We're paying $32,000 in taxes. And again, it's all internal. It's all seamless. Nothing we're doing. The insurance carrier withholds the taxes, pays the taxes, and it goes from there. We now have $319 in our tax-free annuity, $280 in our taxable one. End of year 4, we're going to move $142,000, pay $34,000 in taxes. We now have $449 in our tax-free account, $144 in our taxable account. End of year 5, we're going to complete things. $144,000 transferred, $34,000 paid in taxes, and now we have $586,000 in our tax-free Roth account. And all of our taxes are paid. So going forward, this 586 is now tax-free. And this is a 10-year product, so this is going to continue to grow for another 5 years, and it's going to continue to grow tax-free. So when we take it out, we don't have to pay any taxes. It's also not subject to required minimum distributions. It also will not affect Medicare IRMAA, which is very important stuff to understand as we're doing this. We want to get to tax-free so that we have control of it. And if we need to use this as an income product for those next 5 years, again, we can withdraw 10% each year without any penalty. So we can draw $58,000 tax-free, which is the equivalent of $70-some thousand if we were paying taxes, but it will be tax-free. So let's talk now about the tax brackets and how to manage this thing so that we do it correctly. So here are our tax brackets, and you can find this on my website on nomoremds.com. You can find right below the videos, there's a button for this calculator that we just did, and also for these tax brackets so that you can see and manage it. And what we need to do as best we can is stay within our same tax bracket. So if we're in our 24% tax bracket, we want to try our best to stay in. But if we went over a little bit, it's not that big a deal. With tax brackets, if you bleed over, you're only paying the extra taxes on that money that goes over that amount. So your majority will still be in the lower amount. But what you do need to be concerned with is Medicare IRMAA. So Medicare IRMAA is what will increase your Medicare Part B and your Medicare Part D premium. So we need to be careful with these figures, and where they look at these figures is from 2 years ago. So if you're going to start Medicare at age 65, they're going to look at your income at age 63. If you're going to keep working and you start Medicare at age 70, they're going to look at age 68. So when we're doing these calculations, we want to base our income on those time frames. So you want to really do this. If you can do this before you're Medicare eligible, it's a great time to do it. But even if you're already Medicare eligible, if your tax brackets are low enough and you can stay below the thresholds, then it's still very easy to do and it won't impact you later. So take a look at these. If you have any questions on these, I'm happy to help with them. And again, you can find it all right on my website, nomoremds.com, and the buttons are right there below the videos. Make sure you watch through some of the videos. I explain a lot of the other stuff as we go. I have a tax bracket video that talks about that very specifically, but I'm happy to help with any of this. This is what I do, is I help people get to tax-free money, and this is the best vehicle right now to do that, where we get to use the insurance company's money to pay our taxes. It's pretty crazy to do, but it's exciting, and it's all contractual, so there's nothing to be concerned with going into it. It's all A+ rated company, been around for 100 years. It's just no worry conversion from a taxable account into a tax-free account. So I hope you found all this helpful. Certainly feel free to play around with it. Fill out the form on my website on nomoremds.com, or give me a call and I'm happy to walk you right through it. And again, I set everything up, so there's really nothing that you need to do. And it's an easy transfer from one account to the other account that makes it all happen. So there's no tax implications, anything like that. Works out terrific. Hope you found this helpful. Have a fantastic day.